bringing in right now Todd Gordon. He's the founder of tradinganalysis.com at the site in the NASDAQ in New York City. So Todd, NASDAQ keeps running. How far can this thing go?
Well, it's interesting. I mean, we've seen an amazing run from the October lows. I'm personally long in my stock portfolio, and I've also leveraged up in the option market. And I don't know how much you want to get into the options, Oliver.
Let's get into it.
Basically, yeah, okay, all right, we'll do it. So to get a little kind of leverage on the upside, I did what they call a call butterfly. So basically, it's buying a lower strike at 81.50, selling 82.50, which is a traditional call spread. That was about a 6% move up from earlier October. We're at the 82.50. To get max profit, we need to stop. But it seems like with expiration on Friday, this market is acting so strong, coming out of what everyone was trying to convince us and rammed down our throats that recession was imminent. It's a strong rally, and I'm kind of likely to get out. And maybe just stop messing around with picking upside targets and just be long this market.
Okay, so you're saying you had the November 15th, so that's Friday at 82.50 for the NASDAQ.
Correct.
So the upside kind of barrier that you want to stay away from, we're getting close to that right now.
Exactly. I capped it off with a sale, so we had short 2 at 82.50, long 1 at 83.50. All it is this butterfly is a call debit spread. Buying a call, selling another call, buying another one, and you want to stay right around that body. And again, that was a 6% move from the early October lows, again, where everyone was trying to convince us that stock market top was in. I mean, you look at all sorts of money manager polls, hugely bearish figures, and it just made me more bullish this market. I love how the market's responding with interest rates moving up here, gold selling off, bonds selling off. I think the market acts extremely well in here.
It's interesting, Todd. We talked this morning about one of the heavily watched surveys, the Bank of America Fund Manager Survey. These portfolio managers they surveyed did a U-turn on their cash holdings, dropped them down, ran into cyclicals. They also ran into tech as well. We've got the chart actually for those that want to follow along. My question for a trader like you, Todd, is, how close of attention do you pay to things like positioning and sentiment? Because I mean, this community of investors basically did a 180. Does that mean there's like a melt up taking place, or are you ready to fade this new exuberance?
No, I'm not ready to fade it at all, Oliver. Like I said, I might want to stop trying to get out and pick the top. I love how underinvested I believe this market is. We saw a big rotation into technology, into communications to a lesser extent, where you're starting to see kind of confirmation with kind of a broad-based rally. You're seeing industrials move up, financials move up. You're even seeing consumer discretionary kind of catch up as well. So we're seeing kind of a broad-based rally. What you're also seeing is a rotation out of the defensive sectors that are in reaction to interest rates going up. So you're seeing staples, real estate, utilities sell off. So again, coupled with that kind of very hesitant approach towards the professional money manager community, specifically citing that Barron's report. I can't get off of that report from 2 or 3 weeks ago. 27% of money managers surveyed by Barron's were bullish on the market. I couldn't believe it, with the S&P a couple percent from all-time highs. So we're seeing broad-based strength, widespread participation. We're seeing volume increase in those sectors that are rotating into favor. So again, I'm not really talking, I am talking my book, but again, I don't care if we go up or down. I'm a trader. I'm not a longer-term, long-only portfolio manager, Oliver. So if it wants to sell off, bring it. Just objectively speaking, it feels like the market is about to go on a pretty serious run.
Todd, in that run, thoughts on where the strength is going to be in terms of this rotation that's happening? We've been talking about it a lot since the 10-year bottomed out. Do you feel confident in saying that the next leg of highs will continue to come from banks and come from industrial names? I mean, look at CAT that broke out, or do you want to look at, say, hey, new highs in sentiment and froth building up? This is bound to make its way back into growth and tech.
You know what? I kind of like fading the overall sentiment, fading the conventional wisdom. Everyone's talking about, as we just said, looking for a sell-off, recession imminent. Now we're back at the highs, and now I'm starting to hear more people say we're going to have a melt up. Maybe we're just going to go back to a 2017 grind up. Like I said, technology's already made the move. Apple's at 260. I mean, we could see some larger cap tech and communications move up, but maybe we're just going to see kind of a widespread, widely participated move move up and not have a 1999, 2000 melt up, but a 2016 and 17 low vol grind higher, long only. Perhaps the trading environment we've seen over the last 2 years may take a sidestep, and it's time to be long only in the portfolio. I don't know, to be honest with you, but I'm ready for anything in this market.
Todd, let's talk chips for a sec. I know this is on your radar. I think it's on everyone's. Yep. Chips are having a little bit of the best of both worlds. You've got the value play in Intel that's now actually moving almost to highs, yet the big growth plays and expensive names like AMD and Marvell are also running.
Yeah, the chips are amazing. And, Oliver, I think it actually went back to, this is interesting, back to the 2018-19 lows in emerging markets, which are so heavily weighted towards Asia. I believe that EEM ETF is 49% Asia, which I'm tying it back to your point about chips. If you do any kind of correlation study in terms of Asian equity, South Korea and China, over our chips, and it's an unbelievable correlation. You didn't see any kind of breakdown in late 2018 and 19 in emerging markets and Asian equities to the extent you saw in Western equities. Now we're starting to see the move higher. So it's been unbelievable for sure. Intel trying to break out, love it. We have Skyworks reporting after hours, a good tie into the 5G play with Apple. And AMD. For those of you who love to pull out those charts, get out those Thinkorswim charts. Look at a 20-year downtrend in AMD. I've held this stock since 21. We're now through 20-year resistance at about 35, trading 38. I think it continues to take market share from Intel. I'm not looking to take profits of this. I'm looking to add. I think we should have no problem moving up into the 50s at some point. I don't know if it's going to be 6 months or 12 months or 24 months, but I'll hold the stock as long as it takes.
Hey, AMD always seems to find a new way to break out to new highs. Todd Gordon, appreciate it, running the gambit for us. Really nice commentary here across lots in this market. Big moving parts. Todd Gordon is the founder of TradingAnalysis.com.